What effect does today's hot inflation report have on your investing strategy?
So we've been saying for months, this really is no surprise to us, that the Fed was not going to be in a position to cut rates. And today just confirms that. So you want to be in areas that are going to do well in an inflationary environment. Everything our government is doing is inflationary. So it's laughable to think that people thought this inflation was going to drop like a rock. Energy is an area we've been in all year. I'm hoping the broad sell-off will give us an opportunity today to maybe add to energy.
Okay. I'm sorry to interrupt you. You may add in the energy sector. What are you selling today because of this inflation report?
We're not selling anything today. We sold yesterday. We had some exposure to some longer-term treasuries. So we raised cash a little bit yesterday coming into this number to kind of hedge. And so right now, the way we're positioned, we have assets that are holding up well in this environment. And investors need to make sure they're positioned for this environment where it's going to be higher for longer. Now, look, I will stress this. I think the Fed is still going to cut rates this summer, even though they shouldn't. And that's probably going to be bullish for equities. But as we have stressed, this inflation is going to reaccelerate towards the end of this year. We're going to look at a 10-year closer to 5, and you need to be able to know when to get out and the timing of that. It's not today, but that's coming down the road, and you need to have a strategy for this.
All right, Eddie Ghabour, thanks very much indeed. Just look at that yield on the 10-year Treasury, left-hand side of the screen, 4.505%. Woo.